All right, we are going to discuss the differences between these 5 categories of fund balances. So how about that? Some more accounting categories. Who would have ever thought that would happen? All right, so the first thing you have to do to figure out what category something goes in is it even spendable? All right, so some assets on the books can't even be converted to cash. The problem is you're going to have a few things like some office supplies, I don't know, some courtroom supplies, cleaning supplies. You're going to have some stuff that you can't actually spend, right? I don't know, maybe some food. Maybe if you run a school lunch program, you might have some food inventory, something like that. You might have prepaid items, so you could certainly have some prepaid rent on office spaces. You could certainly have some prepaid insurance, and you can't spend that stuff. So those are non-spendable. It's something that doesn't become cash. All right. So here's a category: non-spendable. And for City of Salem, what they have is supplies. You could also have some kind of permanent fund that you can't spend. Right, like here at the university, we have some scholarships that somebody gave us a big chunk of money. And they say, well, you can't spend all of this. You have to use this to earn interest and invest it in our money, and you can provide the scholarships off the interest. So we can't spend the scholarship fund, all right? So kind of something like that you could have that could be just non-spendable. It's like we can never ever spend that asset. Okay, now everything else are what you would call spendable resources. All right, so all the remaining funds, so you got anything, you've got assets minus liabilities, right, in the funds, right? It leaves us with a balance for this fund, this fund, this fund, this fund, and here's the total funds, right? So I've got some different amounts in these different funds in different categories. And I can spend this, but I can only spend it on a few certain things, right? So I have to figure out how constrained it is. So there's this hierarchy, right, from restricted to unassigned. So you've got restricted, committed, assigned, and unassigned are your remaining categories. After non-spendable, you can't even spend it. Now you got some stuff you can spend, but some of it is restricted, some of it's committed, some of it's assigned, and so we have to figure out. So how do we figure out what this is? All right, so here's the hierarchy. Restricted are the least usable. It's like they're most constrained. I can't do anything with this. Committed, we've said we're going to do something with it, and so we need to be doing that. Assigned, yeah, we've been assigned. It's not legally committed, right? We didn't vote at City Council to spend it, but it is assigned. And then we got some funds that they're not assigned yet, right? Then they eventually go into the general fund, right? You won't have unassigned funds in any of the other funds. So if you look, you see down here where we've got our general fund, right? And you got some unassigned funds. You'll kind of notice that none of the other funds, the special revenue, courthouse, debt service fund, they don't have any unassigned funds because those funds are assigned, right? That's the point of having a separate fund for something. And the general fund might have some unassigned funds because it's general, it's like for whatever. But the courthouse renovation fund only has committed or assigned or restricted funds because there's a special thing we're doing for the courthouse, and that has to go to that, right? So of course they don't have unassigned. All right. So, restricted, that's the most constrained, all right? So, it's easy to remember because it's kind of forced on you. Somebody's saying you have to set these funds aside. So they're spendable. I can use these funds, I can spend them, but I can only spend them in a certain way, and somebody else says this, right? So, typically it comes from like the federal government gives the state government some money for Medicaid. You can only use them for Medicaid, period. That's it. So yes, we have some funds, they're sitting there, but I can't spend them on anything other than this one thing. It's restricted. Or a lot of organizations, right, that are governmental, school districts, cities, states, issue bonds. And part of issuing the bond says you must set aside money every month, every year, to retire the bonds when they mature. So that is what's called a debt covenant. And it's kind of like a contract that you've agreed to. And you can't get out of that. So you can't use those funds, they're restricted. All right? So something that's required that resources be used for specific purposes coming from outside, right? Permanent funds are non-spendable, right? So it's still hard to keep in track, but if it's something that you're never ever going to be able to spend at all ever, it's funds, but you can't ever spend it, then that's going in non-spendable, right? We're only going to like earn the interest and spend the interest, right? So don't confuse restricted funds with non-spendable funds. Non-spendable funds are going to get spent. They're just going to get spent on this one certain restricted thing. All right, committed funds. All right. All right, committed funds. Constraints are placed by the government's authority. So, in other words, in this example, a committed fund would be by the city of Salem. If you're looking at Texas A&M Kingsville, it means we've committed ourselves to do this. All right, so it's a contractual obligation. It's not coming from outside. It's not imposed on us. All right. And as you know, I'm sure you've heard this term, rainy day funds. The state of Texas has a rainy day fund. There's always a big argument about how are we going to use the rainy day fund? Why are we raising taxes when we've got rainy day fund? So rainy day funds are committed if a resolution creates them. All right. In other words, remember what makes something committed is we've said we're going to do this with the money. All right, we've said we're going to do it with the money, and we're going to do that. So rainy day funds that we've said we will use in these certain circumstances. There's a budget shortfall of this amount. You know, tax revenues decrease by a certain amount. Then we will use the rainy day fund. That would be committed. If you don't have something specifically tying the rainy day fund to something else, then they're not committed because they're not committed, right? We haven't said when we'll use them. So rainy day funds are typically committed. And assigned funds, we have expressed our intent to use them. So we as the government, when I say we, I mean the government, so let's take Texas A&M Kingsville as the example. Texas A&M Kingsville has said we have this $10,000 and we're going to commit to use it for a student scholarship or 5 student scholarships of $2,000. So we've put out there, hey, apply for a $2,000 scholarship. We haven't spent them yet. There's nobody outside obligating us to use it. It's just the money we have and we said we're going to do this. So that's like an expressed intent. We could also come along and say, you know what, nobody applied for it, so we're not going to use it. Nobody who had high enough grades apply. So, but it is assigned. It's like this is what it's assigned for. We've purchased something and we need to pay for it, so it's assigned. All right, if that makes sense. And then, of course, unassigned, just like it sounds. That's where the leftover balance is. So, you know, we've got this money in this fund, or assets in the fund, I guess I should say, but if it's spendable, it's cash. So we got this cash in the fund, but it can only be in the general fund, right? Remember, I said if it's in one of these other funds, well, they have a purpose. We're spending money for a reason in those, so it's either committed or assigned or something. But if there's leftover money in one of these funds, it goes back to the general fund. They didn't use it. It goes back to the general fund and it becomes unassigned. So anything that's not constrained goes to the general fund. All right. So how do you decide about this? Where does it go? Well, you can just ask yourself these questions. Are there assets not in spendable form? All right. So if they're in non-spendable form, it becomes non-spendable. So supplies, prepaid rent, stuff like that. But if it's spendable form, so if it's cash, right? What can you spend cash? I suppose you can have an investment that you could sell. So it's spendable. Let's see what happens next. Okay. So now, are we required to maintain it in permanent funds? Right? Are we required to maintain it in permanent funds? Well, then we have to keep it in non-spendable. Next, we ask ourselves, are there restrictions from outside? In other words, I'm Texas A&M Kingsville, but the state of Texas has given Texas A&M Kingsville the money to pay the dean's salary. Well, Texas A&M Kingsville has the cash. It's in a fund. It's in whatever, Texas A&M Kingsville General Fund. I don't know where they keep that stuff. A dean's salary would seem to me to be general, but maybe it's like College of Business Fund. So, well, they gave that money to pay her salary, but they can't spend it for anything else, so the state says that's how that is. A highway grant, a sinking fund. So, next, it's not one of those. Okay, so is it committed, right? So have we said we were going to use it for something? Rainy day reserve, or have we said these funds will be for rainy day, these funds will be to, it's not imposed from outside, we're saying we're going to use it. We're going to send the dean on a business trip to this. We're going to use some of the money that they gave to the dean's, running the dean's office, to pay for a business trip for her. Okay. Then we may have some that are assigned, right? The government itself, whoever's keeping the books, the city or in our case, Texas A&M Kingsville. There's specific resources that have been identified, but we haven't committed to that. So, library acquisitions, other capital projects. Then everything else that is not somehow assigned, right? And if it's from one of these other funds, it's going to get moved over to the general fund as unassigned. There's no fund-specific unassigned funds. All right. So when you're all said and done, you've got your spendable, restricted, committed, assigned, and unassigned. And again, no funds left unassigned anywhere else. So special revenue, capital project, debt service, they will never have unassigned. Only the first general fund column will have unassigned. So that's how you decide whether or not a fund, which hierarchy of fund it goes in, right? There's different levels of restrictions. All right, so as we start committing to use the funds, we have this term in governmental accounting we call it an encumbrance, right? So as you know, we're going to get some funds in from taxes. We're going to get some funds in from grants. The state is going to give A&M Kingsville some money. Then A&M Kingsville is going to give the College of Business some money, right? Things like that, right? So you'll come across this term encumbrance. So what organizations do, you don't really report this in these financial statements, but they will encumber the resource, and then that kind of means like put it on hold, right? So I have some funds encumbered right now. I'm going to go to the American Accounting Association meeting, and I'm going to present a paper there, and I'm going to review a paper. I'm going to do some stuff at this meeting, so the College of Business is going to pay for it, for me to go there. So I put in a request in the computer. You go in and you say, I'm going to go and I'm going to spend this much airfare, this much hotel, and this much food and taxis and stuff. And so I put that on hold, and they're going to pay $1,500 for me to go on this conference. And so it's set aside, it's approved and put on hold, and they call that an encumbrance. So now it's not going to get spent for someone else, right? So we typically say if there's an encumbrance like that, right, it hasn't been spent, and it's also entirely possible I won't go on that trip, right? I mean, so things happen, right? But by putting this encumbrance on, the resources are committed, right? So they go in the committed category. So why? Because it's an expressed intent. They can't be unassigned, is I guess what we're trying to get at with encumbrances. All right. You will not see reporting of a negative balance in a fund, right? So when you come to when you're looking at this, it's possible that you could have your assets exceed your liabilities, but you can't report a negative balance in the fund. Any negative amount goes over to the unassigned fund balance over here. All right, so it'll be under the general fund. So that's how that goes. All right. We're going to stop here, and we're going to pick up with activity accounts. So you may want to flip over to page 35.